This session is part of the Indie Author Fringe Conference, a 3 times a year author conference fringe to the major publishing fairs London Book Fair, Book Expo America and Frankfurt Book Fair. The Indie Author Fringe is run under the stewardship of the Alliance of Independent Authors, is organised by writers for writers and is free to attend. Let's see who's sharing self-publishing insights in this session.
EUVAT, Pay Attention or Face a Fine, by Henry Hyde, with questions posed by Joe Bloggs, a Cockney gentleman. A fine? Really? Yes. According to Her Majesty's Revenue and Customs penalties for non-compliance legislation, the VAT authorities have the right to impose penalties of up to 100%. In other words, if you deliberately avoid registering for VAT, you may be liable to a penalty equal to the amount of VAT that you should have paid. For serious offences, the matter will be investigated and they may bring criminal proceedings against you. In addition, according to Section 69(2) of the UK VAT Act, there's a penalty for the failure to preserve records equating to an amount of £500. If records are disposed or concealed following the issue of an information notice requiring the production of records, this is a criminal offence that could result in up to 2 years in prison. Right, do I have your attention now? Before we begin, note that the show notes from this podcast contain all the relevant links to external websites mentioned in the broadcast, so you should download them after listening. What is EUVAT? On January 1st, 2015, new legislation came into force in the European Union governing the charging and collection of value-added tax, VAT, on telecommunications, broadcasting and electronic services. This includes all the familiar digital goods and services such as images or text such as photos, screensavers, ebooks and other digitised documents, for example PDF files, music, film, games, including games of chance and gambling games and of programmes on demand, online magazines, website supply or web hosting services, distance maintenance of programmes and equipment, supplies of software and software updates, advertising space on a website. Those of you who supply online courses also need to be aware that the regulations cover services provided through automated learning, and that automated learning doesn't involve any human involvement and is considered to be a digital service, and as a result, now subject to the new VAT regulations. You can read the actual regulations online, see the show notes. Go ahead, knock yourself out. The UK's HMRC guidance notes can be found online, and again I've provided the link. The legislation applies to all transactions that are essentially automated and where a business supplies digital services from the UK to another EU member state, supplies those services to a private consumer in another EU member state, and charges for that supply. Can I have that in plain English, please? OK, an example would be where a business, and that means you as an author or entrepreneur, sells digital products from their website, typically using a shopping cart system or buy now buttons. The customer selects the digital goods they want to purchase, in your case probably ebooks, adds them to a cart and then goes to the online checkout. They pay the total price of the goods using PayPal, a credit or debit card, and then receive an automated email in your name as the seller, generated by the software, with links to download the products. They may instead be taken automatically to a different page on the website with links to access their purchases immediately. The most significant aspect is that instead of VAT being charged at the rate pertaining in the seller's country, it is now the place of purchase which dictates the rate that should be levied. Coupled with this, the threshold at which a business should charge VAT for their goods or services has effectively been reduced to zero for cross-border sales within the EU. Under normal circumstances, for example, a British business would not charge VAT to its customers until its turnover exceeds £83,000 per annum. Now, however, even a single sale to a private person in another EU member state is subject to VAT. For example, if a British business, even a one-man band, sells a single PDF file from their website to someone located in France, then it is the French VAT rate that applies, not the UK rate. There's quite a complex list of presumptions that could be made about the place where the supply should be taxed. The new law also states that the business making the supply must obtain and keep two pieces of non-contradictory information to support and evidence the member state where the customer is normally located, which must be stored for potential future investigation for 10 years. This aspect alone is fraught with difficulties. HMRC's list of evidence that should be obtained and retained to support a decision on where the consumer is located includes the billing address of the customer, the Internet Protocol IP address of the device used by the customer's bank details, the country code of the SIM card used by the customer, the location of the customer's fixed landline through which the service is supplied, or other commercially relevant information, for example, a product coding information which electronically links the sale to a particular jurisdiction. Good luck with that! Fortunately, lobbying by pressure groups has brought some relief in this respect. See the information about the EUVAT action group later on.
Why was the legislation introduced?
The new regulations were originally designed to prevent large corporations from establishing headquarters in low VAT countries such as Luxembourg, and thereby avoiding paying VAT at a fair rate compared to indigenous businesses. There have been some well-publicised cases of giant companies such as Amazon allegedly paying only a fraction of the tax paid by some of their major European competitors, thus gaining an unfair advantage.
Surely that's fair, so why has there been such an uproar?
The new regulations were drawn up and enacted in 2006 to 2008. Clearly, the internet, and the world in general, has changed a great deal since then. Most importantly, the use of the World Wide Web as an online marketplace by so-called micro-businesses and solo entrepreneurs has grown exponentially in recent years. The internet landscape has changed out of all recognition during the intervening period. The legislation has created a great deal of collateral damage that couldn't have been foreseen in 2008. The stipulations for calculating VAT in the 28 member states, collecting the correct amounts and submitting returns has proved far too onerous for what, in many cases, are kitchen table hobby businesses or solo entrepreneurs, such as writers. Even some larger businesses are complaining that the administrative burden, compared to the revenue collected, is excessive. For the vast majority of micro-businesses, the effect is compounded. They may have to spend a great deal of time and money collecting just a few euros of VAT from EU sales and submitting quarterly returns.
But I'm just a writer selling my own self-published books and courses. Surely this doesn't apply to me?
Oh, yes, it does. If you sell ebooks or downloadable courses from your own blog or website using an automated system such as PayPal buttons or a shopping cart, perhaps one of the many free or low-cost options available via WordPress, for example, then you are affected. The same applies to pre-recorded video and or animated material delivered online, and any ebook, text file or PDF content that your customers or clients access via an automated system. Hundreds of thousands of other individuals and tiny businesses selling knitting patterns, images, music files, hobby designs and homegrown publications are also affected. You are not alone.
Are there no exceptions?
Nope. If you're personally responsible for sales from your own site, you should still register for VAT MOS, that's VAT Mini One Stop Shop. The regulations clearly state if you make taxable supplies of digital services to customers in other EU member states and your UK taxable turnover is below the UK VAT registration threshold, you may use the VAT MOS to account for the VAT due in other EU member states, but you do not need to account for and pay VAT on sales to your UK customers. In these circumstances, you must apply for UK VAT registration, restrict any VAT refund claims you submit to HMRC to amounts directly attributable to your cross-border EU sales activities on which you'll be accounting VAT through MOS. If you live in a different EU member state, you'll have to check with your local tax authorities because not every country has the same regulations or allowances. But, and this has been subject to a great deal of debate, transactions where there's a significant degree of human intervention are exempt. For example, it would be possible to use PayPal buttons on your site to generate an email to you, the seller, detailing the purchase made by the customer. Then, however, you'd need to compose an individually tailored email for that customer to which you must attach the file purchased, such as a PDF, ebook or MP3 file. Such a situation counts as an e-service, but according to HMRC, you're not making an electronic supply and are therefore not governed by the EU VAT rules. Though, be warned, not every EU member state seems to be interpreting this in the same way. You could also configure your system to simply block sales to any EU country other than the UK, though be warned, doing this could fall foul of EU regulations on discrimination. Which flags up yet another problem. Each country is interpreting these things differently, and how are we supposed to keep current with what, say, the Romanian definitions might be this month? At the moment, HMRC's light touch regime offers some protection, as any foreign country wishing to challenge a UK trader would have to go through them. But how long is that going to last? Whilst workarounds such as this may be fine for very low volume businesses, the demands of having to service every customer individually in this way can quickly become burdensome. In addition, if the files being sent are large, it may cause problems with your internet service provider, many of whom set bandwidth limits on email accounts. And of course, this represents a major retrograde step in terms of customer service. Your site visitors have been used to receiving their purchases within perhaps 30 seconds of sending their payment. Now they'll have to wait until you can find the time to send their order, which may be some hours away if it just so happens that you've just gone to bed, let alone gone on holiday or are ill.
So, what should I charge my customers?
This is tricky, and is proving to be one of the more intractable problems faced by micro-businesses attempting to comply with the legislation. There are 28 member states in the EU, each of which has varying levels of VAT charged according to the goods or services being sold. Concentrating just on e-books, the subject closest to the hearts of all ally members, the VAT chargeable ranges from 17% in Luxembourg up to a whopping 27% in Hungary. In all, as at October 2016, there are 10 different rates being charged on e-books in the EU. See the table and link provided in the show notes. The variety of rates of VAT means that it's virtually impossible for a seller running their own website or blog to display the correct price that each customer will have to pay for the goods on offer until after they've determined the location of the purchaser. If you only use a generic term such as X pounds plus the rate of VAT applicable in the country where you're located, you'll be entering a legally very grey area, because strictly speaking, it's a legal requirement in the EU to display gross retail prices to consumers inclusive of VAT before they make their purchase decision. Quite apart from the legal requirement, it's well known that if a customer finds the price suddenly going up as they go through the checkout process, this leads to much higher rates of cart abandonment. In other words, people change their minds and don't complete the purchase. Alternatively, you could plump for an average charge such as 20% and levy that rate on your customers across the board. However, you'll still have to account for the actual rate of VAT that should have been charged. So, if you happen to have a glut of customers from, say, Hungary, 27%, or Sweden, 25%, you'll find yourself out of pocket when you come to make your quarterly return.
So, where do I register for VAT?
Fortunately, the revenue authorities did foresee the nightmares of businesses potentially having to register for VAT in 28 different countries, which you're free to do if you wish, and so have established the VAT MOS system mentioned earlier. This means that a UK business only needs to register voluntarily with the UK's HMRC. You make quarterly VAT returns to them, noting your UK VAT liability as zero, but itemising your sales and the VAT due to other member states. This also means that you can only reclaim VAT on expenses relating to sales to those other member states, and not on any UK expenses, unlike a business with full registration, whether voluntary or triggered by turnover exceeding £83,000. If you don't live in the UK, you'll need to contact your own national VAT authorities.
I can't be bothered to deal with all this. What are my options?
First of all, you'd be forgiving for throwing up your hands and deciding to pack it all in. Tragically, many thousands of micro businesses already have. Another option is to sell your books via an online marketplace of one kind or another. You're probably already familiar with Amazon, the biggest online marketplace of all, but they take their cut of your cover price, ranging from perhaps 30% to 70%, depending on the specific deal that you have with them. Of course, other services are available, such as Smashwords, Nook and Kobo. Ally is a great organisation to advise you on the alternatives. However, there are currently particular problems using marketplaces in EU countries which still have retail price maintenance on books and e-books, notably France and Germany. 15 OECD countries, 10 of which are EU members, have regulations for fixing the price of printed books. At least 8 of these have extended such regulations to e-books. This means the price for a particular ebook must be the same across all platforms, which is currently impossible to achieve using some platforms.
Come on, surely there must be some solutions.
Well, a few one-stop services have emerged to help solve the problem. One that's received excellent reviews is payhip.com, which charges just 5% on top of the standard PayPal fee structure. Its primary appeal is that they guarantee to deal with all aspects of VAT, so they work out how much VAT to charge the customer, collect the appropriate amounts, and then they submit returns to VAT MOS. In order to do this, you effectively grant them a license to resell your work. You simply decide whether you want the price you charge PayHip to be net or gross of VAT. For example, you might set the price of your book at £2 net, so PayHip will charge a customer from Greece, say, £2.46 inclusive of VAT. A customer from Malta would pay just £2.36. On the other hand, if you agree for your price to be gross, a Greek customer would pay just £2, the same as anyone else, but you'd obviously receive a smaller amount in royalties. Other services that have taken steps to cope with the EU VAT problem include Bandcamp, BigCommerce, Envato, Etsy, Gumroad, Pulley, Sells, Sendale, Shopify and Teachable. Links to all these companies are in the show notes. Other shopping cart systems and WordPress plugins are also working hard to come up with low-cost solutions, but you need to be very careful. Not every online marketplace will handle VAT on your behalf, which would leave you not only out of pocket, having surrendered a substantial portion of your cover price, but still having to deal with the VAT aspects. For example, the popular Sells.com states specifically, while Sells helps you collect sales tax, it's up to you as a business owner to pay the applicable taxes depending on your location. Always read the small print, check out the FAQs on the service's website or email them direct.
Ha! You poor Europeans! I live in the USA and this has nothing to do with me.
Well, in fact it does. An agreement was made between the US government and the EU back in 2003 which made US businesses liable to collect VAT on behalf of the EU under the heading of importation of goods. Following changes introduced on 1st July 2003, non-EU businesses providing digital electronic commerce and entertainment products and services to EU countries are also required to register with the tax authorities in the relevant EU member state and to collect VAT on their sales at the appropriate rate according to the location of the purchaser. This is part of a quote from Wikipedia. No, we Europeans didn't know this either, and yes, we can understand that you'll be pretty cross about this. Clearly, Washington is as capable of springing surprises on its citizens as Brussels is. Other countries around the world are in the process of drafting similar legislation because it's dawned on them that vast amounts of untaxed trade is taking place online. And if there's one thing that governments hate, it's unregulated, untaxed trade, especially at a time when they need the money because of the demands of, say, an ageing population.
So, what's going to happen? Can we get this law reversed?
In short, probably not. This is a European-wide measure which also chimes with potential digital trade legislation in other countries around the world. This looks likely to be just the beginning of an even more complex situation. We may soon be asked to collect taxes for the American, Australian or Azerbaijani governments when we buy or sell online, whilst they collect VAT for ours. Regardless of whether your views are pro or anti-Europe, the legislation is a fait accompli. It even seems unlikely that the recent UK referendum, which resulted in the so-called Brexit outcome, will make any difference. Certainly, for the time being, we are stuck with the EU VAT legislation.
So, can I get any help with this?
Fortunately, the last couple of years have seen a remarkable phenomenon. A mass movement has grown online, both to protest about these changes that many feel have been introduced by stealth and which are unworkable for the vast majority of micro-businesses, and to offer advice and counselling to those affected. The most effective group is called EUVAT Action and has a website at http://euvatAction.org. Their site contains a huge amount of useful and relevant information, far more than can be included in this podcast. Its leading members have formed a negotiating team with HMRC here in the UK, and they've been extremely active lobbying UK MPs, MEPs and members of the European Commission, as well as organising online protests such as petitions and Twitter storms. I thoroughly recommend that you visit their site, follow them on Facebook and Twitter, and support their actions. The links are given in the show notes. So to sum up, for many ally members, a solution such as that provided by PayHip may be the answer for the time being, or sending your products to customers as email attachments. But even if such workarounds solve the immediate problem, it's far from ideal. The PayHip system's rather limited in terms of applying your own branding, and being forced to use the alternative of selling via one of the large portals, such as Amazon, obviously has a deleterious effect on your profit margin. The EU legislatures may not have intended to drive you into the arms of the giants, but that's certainly been one of the effects. Remember, if you just carry on selling as you always used to and ignore the regulations, you are breaking the law. Even as an individual or a small business with a turnover that's well inside the UK's VAT threshold, you now need to register for VAT and collect tax for other European governments. Perhaps you've reached a stage where the technical complexities and expense of running a simple blog are quite enough without having to add more complexity for tax collection purposes. As Ally members, we're amongst the micro businesses that stand to lose the most from this kind of legislation. Already we've seen many well-known authors restrict themselves to sales via Amazon and other major portals and abandon or radically amend plans for other digital offerings such as online writing and marketing courses. It's important that our voice is heard amongst the many thousands clamouring for fair changes to be made to the legislation. We accept that the big cheats need to be dealt with. We even accept that changes need to be made to equalise VAT rates and policies across the international community. The fact that 28 EU member states have a total of around 80 different rates of VAT is clearly a nonsense, but the current legislation pertaining to digital products is ill-judged and poorly aimed. HMRC now recognises that big companies will shrug it off, whereas the hundreds of thousands of entrepreneurial individuals who were encouraged by their governments to exploit the new technology and become a digital beacon for the world are now suffering. At the very least, the EU member states need to agree to a common threshold before the VAT MOS regulation applies. Arguments in its favour include pointing out the excessive costs of collection of tiny amounts of tax by micro-businesses that may only make a handful of cross-border sales. Pressure from the EU VAT Action Group has gained traction for legislation in this area, though it has yet to be enacted. So, if you'd like to help make a difference to this situation, then I thoroughly recommend that you spend time reading the enormous amount of information and latest news at the EU VAT Action website. This includes analysis of the potential effects of Brexit, including the possible devastating effect on the simplified VAT MOS rules. EU VAT Action Group leading light Claire Yosa has written an insightful blog post debunking many popular myths about what leaving the EU will do for small businesses. And finally, if you're still feeling smug because you don't think you're affected by this, remember, the digital goods legislation is a pilot project, and there are plans to introduce similar legislation covering all physical goods sold cross-border, regardless of whether the UK is a member of the European Union or not. Many people seem to have trouble grasping this. So, as an author, that means that your self-published paperbacks and hardbacks, CDs, DVDs and USB keys sent via the post will suffer the same fate. And don't think you can just hide from all this. We all know how alarming it can be when large organisations seem to know a great deal about us that we imagine was private. Trading online leaves a lot of breadcrumbs for the relevant authorities to follow. I hope the information provided here has given you an insight into just how seriously you need to take the subject of EU VAT. Pay attention, or potentially pay a fine. My name's Henry Hyde, and I'm recording this in October 2016 for the Alliance of Independent Authors.
You've been listening to another great session brought to you by the Indie Author Fringe and the Alliance of Independent Authors, Ally. You can find out more about both by visiting Ally's Self-Publishing Advice Centre, www.selfpublishingadvice.org. Now, go write and publish.